Hey guys, this is Alan again, and due to a lot of requests from the last video, this will be the second lesson of ICT, and which I feel is like probably an important one, which is identifying order blocks. Okay, so many of you know what an order block is, right? It's mainly just for example, an up candle into a down candle into an up candle. As soon as the high of this candle is pushed through, this is now a valid um, bullish order block, right? And when we see price go into it, we expect reaction out of it, right? So the thing is, there's a lot of order blocks, right? Like, yo, there's an order block here, right? You can argue that price comes into it, wicks you out, destroys you, and then runs higher. Yes, right? But there's ways to identify what order block is good and which one you should use, right? And I know many of you guys or some of you guys know use the terms a lot of order block like validity, right? You want to see if the order block is valid, basically, right? Like, how do you know an order block is valid? And a big one I want you guys to kind of write down if you guys haven't. Look for order blocks resting underneath fair value gaps or imbalances. Okay, that's like a main sign, like, hey, if it fills that order block, it fills that fair value gap and goes into this order block, that is probably a good order block you can buy from, right? And I know you're looking at this like, okay, then where would you take your target, right? For me personally, if you catch 10 to 15 pips from this order block, it's more than enough to just bank that as your trade, right? So it fills this in, attacks this one. Let's say it closes here. As soon as this candle closes and you just want to buy in right there, your stop loss resting underneath this order block, right? Because if you are looking for it to go higher, you do not want to see price take out the low of this order block. Okay, price may go into the mean of it and then potentially push higher, but you wouldn't want your stop loss there then, right? If it can attack the mean and then reverse higher or push higher, you would want the order block to be the stop loss to be resting underneath this order block here, right? And you're not going to catch this whole move up. I personally would just catch to maybe fill in this balance here, right? So it's a very quick 1-to-1 trade. But if you take one-to-one, you don't even risk 1% on this. If this is like a low resistance trade or a low probability trade, you can either avoid it or just take a smaller risk. So 0.5% here will be definitely a 1-to-1, right? And look, I'm literally just coming to fill in this gap, that imbalance here, because look, it fills this imbalance, attacks this order block, you buy in right there, it runs higher, right? Fill this imbalance in, and you're just out of the trade. And there's no need for you to be in this trade anymore because this imbalance is filled already, right? The next area you could probably target maybe this bearish order block, right, or this one here. I'll say it's probably this one, bearish order block, right? Bearish order block, vice versa, right? Down candle, up candle into down candle. As soon as the low is taken out for this green candle right here, it's a bearish order block. I know it's a green candle and you're like, hey, why is it a bearish order block then? Well, because when we see price move into it, we want to see bearish candles follow it, aka, down candles. Okay. So as you can see, this is the bullish order block because once price goes into it, you want to see price move higher. This is a bearish, price comes up into it, you want to see it go lower, right? Same thing, right? You see how there's a little gap right here? Price fills this gap up right here. Let's just say you enter right here. Okay, same thing, right? This is all hypothetical. You're not going to be entering off order blocks like this. Okay, but let's say it fills this, you enter it right there. Stop loss resting above the order block here. Obviously, it wouldn't stop you out. Maybe some slippage or spread will take you out with this trade. But let's say you're lucky, it did not take you out. Where are you coming to? Where are you trying to fill in now, right? Like, that's what I'm looking for personally. Like, where am I going to exit my trade, right? Takes this out, attacks lower. This is technically already filled, maybe on a lower time frame. So we can bring this down to the 15, right? And we can see that, hey, maybe, yeah, there's an order block right here. I mean, not order block. Yeah, there's an order block right here, but there's a gap right there. So if you want to put your TP right at that fair value gap right there, imbalance right there, right? As soon as it takes this low out right here and it fills this in, I would just exit the trade. This is a solid 1 to 4 trade, right? 1 to 4.5. So even if you're risking 0.5%, right? Let's just be a little more realistic and put the stop above that. So this is a more realistic, look at this trade, 1 to 2.7, 1 to 2, 1 to 3, basically, just to fill this in. All right. You're not looking to, rate these lows yet. If you're looking for this, for you to see this bullish order block gets respected, you're just looking for filling the inefficiency in price, which is here, right? You're not targeting this low immediately, right? Until you see like, this takes it out. Then you can say, oh, okay, it's took it out, wait for a better entry, look for something else to happen, right? So for example, this is the bearish order block, right? From the 1 hour. You guys remember that, right? Right here, takes it in, goes into it, fills the little gap or imbalance right there, fills it up very, very nice. I'm delete this so you guys can see a little better. Fills it up very, very nicely, right? As soon as it fills it up, tanks lower, right? And you don't see it here, but like I said, you go to the lower time frame, the 15 minutes, right? Oh, what the heck? Totally lost it because I right here. Okay, let's try a little box on that. Oh no, I'm lagging. Okay, so you see there's a gap right here, right? Gap right there, right? This one kind of fills it in, right? There's a gap right here, right? Like I said, once you're targeting these gaps, you're getting into a lot better trades, like a lot better trades. Okay. Yes, you can exit off this low too. That would not be a problem. 1 to 2, you can take these like as soon as it runs through it. Cool. All right. But look, as soon as you take this one right here, right? This gap gets filled. There's an order block resting right here, right? So same thing. Let's say you do take this one. Like I said, hypothetically, you're not taking all of these trades, especially not this one. But let's say you do take this one just to test, just to build experience, right? And your stop loss is resting, maybe below these lows here, right? And you're targeting to fill this gap in right here, right? You're filling that target to fill this gap. Obviously, you'd be running in some profits and then you're stopped out, right? You're running maybe 15 pips in profit. Let's see. Yeah, 14 pips in profit right there. You're running 14 pips in profit and then you're stopped out, right? Just because, it doesn't really come all the way to fill it, right? But you can see it comes into this old low created here, right? Where this technically is a breaker, right? Comes down candle, runs higher, takes out highs, and then runs through it, comes back into it and takes a lower, right? This will honestly be a sell right here, right? But that's just more an advanced model that I don't want to kind of go into it today. Today I'm going to mainly focus on order blocks for you guys, right? So you guys are able to see like how you guys are able to use these order blocks, right? So you're not using every single order block. Like I said, you're only using the ones that, there's a fair value gap, right? Like this pushed up higher, right? And then there's an order block resting right here, but there's a little gap right here, right? And as you see, the next candle comes down, fills it perfectly, right? You see this right here? Take a look at this low, 32042, and the low's like up right here. Okay, I want you guys to pay attention. The low's right here. Okay, 32042, and then the high of this candle is 32043. Do you see that? So as you can see, it comes in perfectly, fills it in, goes into this order block right here. This down candle right here is a bullish order block, right? Comes into it, right? You can say, hey, it doesn't come to the body, but this entire thing, entire candle, including the wick, is an order block, okay? So comes into it, runs higher, right? Very, very simple. There's a little gap right here. It fills it in with this down candle here, runs higher, okay? Like I said, what are you targeting? Maybe target these highs, this old high that's right here, maybe this high here, right? But mainly, like I said, if you don't really see a fair value gap or imbalance to target, I'll be very, very cautious with this trade, right? Like if I'm already running in profits from this trade. So For example, let's say you did take it, maybe you took it a little early, right? Stop loss resting underneath the order block, and you're just targeting these highs here. Nothing wrong with it. Relatively equal highs right here, right? As soon as it takes it out, you're out of this trade 1 to 2, right? Very, very simple concept, right? But like I said, you want to find order blocks that are resting underneath or above fair value gaps and imbalances. Those are the ones that really, really make it high value. Okay. So for example, there's an order block right here, right? There's a fair value gap right here, right? Price runs higher, goes right into it, hits it perfectly in the mean of it. Like I said, it can go to the mean of it, right? It doesn't matter. Let's say you enter this right at the wick right here, okay? And your stop loss is resting above it, like, hey, I don't want to see this happen. And where are you targeting? Let's say you're just targeting to fill this gap or to this order block here. Okay, very, very simple trade. This is a solid 1 to 1, maybe 1 to 0.9. But these are the trades that are gonna get you high probability, right? Like these are the one. Like if you want to go lower time frame, we can go in lower time frame and see there's a gap there that we can check out, right? Because as long as you're able to start seeing these trades play out, yeah, right here. You see this gap right here? Let's say you target this gap right here, right here. Okay, you're not aiming for the low, you're aiming for this gap. Now this trade actually becomes a very, very solid 1 to 1.5 trade. These are the trades that are going to scale your account up. You don't need to have these huge gains, okay? You do not need to have these 300, 200 pip gains, these 60, 80 pips gains. Just take 15 to 20 pips at a time. Personally, if this just came down to this high right here, like this old high right here, and I'm scared that it might run higher again, I'll just take this 1 to 1. I have no problem taking 1 to 1. Are you gonna be mad that you didn't catch the full move when you caught 20 pips for yourself? Let's say you had a $10,000 account. This is 100%. This is $100 gain right here. Just take the $100 and walk out of here. All right. If you're risking 1%, 1 to 1, that's $100 back in your account. Okay. So I want you guys to really understand these are just very, very basic rules just to order blocks. Okay. I want you guys to start looking for these order blocks, right? And start not trading it, but you can definitely start looking forward to, hey, like you can start seeing, order blocks being traded to, right? As soon as it fills a gap, there's response from it, right? So let's talk about it again, right? So a bullish order block, right? Very, very simple. It's a down candle, okay? Bearish order block, it's an up candle or a green candle, okay? And when they're bullish, because when price goes into these order blocks, we want to see reaction, okay? But there has to be context, aka there has to be a fair value gap or imbalance that needs to be filled along with it getting the order block hit, okay? So for example, like this one here, hits this one, runs higher, right? Like I said, you can just take it to this high right here. You don't even catch all of this. I'm not aiming to catch all of this. I'm just aiming to fill an imbalance and I'm just out of that trade. Okay, that's why a lot of my trades are very, very quick. 1 to 1s, 10, 15 pips, and I'm out. Okay. And these are the ones you're aiming for. Like these are the ones you're aiming for. Like, for example, right? There's a bunch of trades that happen here, right? And you can catch all like this huge imbalance here. All you gotta do is wait. Just wait. You don't gotta buy into it, wait until it go higher. Like you don't have to gamble. Just wait for it. Wait for it slowly. Like, okay, it goes into it. Does it really fill it? This is the one that fills it. If it fills it right here, an order block right there, that's bang. Okay. Let's just take this for example. Your stop loss resting above it. And all you're doing is just filling filling the imbalance in. As soon as you fill the imbalance in, right, there's probably some imbalances lower time frame, but you get the idea, right? And I want to keep it very simple for the second lesson of order blocks, right? Just so when I do talk about it in the future, or if there is, other concepts I want to teach you guys on the YouTube, you guys have an idea what an order block is and you guys understand what I'm saying. Okay. But that's going to be it for now. I'll see you guys on the next one.